This is a story about the so-called grey market for luxury cars, where millions of dollars worth of luxury vehicles like BMWs and Mercedes were shipped from BC to China, where they fetch much higher prices. It's not illegal, but the car companies hate it, which means that exporters went to extraordinary lengths to get around the rules they put in place to try to stop it, relying on help from insurance agents who pocketed thousands of dollars in commissions and sometimes even acted as fronts for the exporters by buying the cars themselves. Now, this was flagged as a threat for money laundering back in 2019 by Peter German, the former RCMP deputy commissioner, but it's only in the past year that we've seen more than a dozen insurance agents punished for their role in that grey market. And to learn more about it, CBC has recently obtained documents from ICBC and the body that regulates insurance agents who have faced fines and suspensions for what they've done. One of those documents is a confidential report from accounting firm MNP describing what happened, how a buyer in China would put in an order for a car with an exporter in BC. That exporter then hired a so-called straw buyer for 3 to 5% of the money to act like a legitimate purchaser. They would buy a luxury vehicle and then get a year's worth of insurance at the car company's insistence to prove they weren't going to try to take the luxury vehicle offshore, only to get their insurance agent to cancel the policy within hours or days. And what this scheme did in the process was to highlight a flaw in ICBC's commission scheme, because the agent got to keep that commission even though the policy itself was cancelled within hours. One of the first agents punished back in 2021 did around 300 of these transactions, making thousands in commissions. And in the past 12 months, other agents have also been punished for pocketing thousands of dollars through multiple transactions. One, in fact, told the regulator he thought it was weird that ICBC didn't claw back the money. The insurer told CBC it ultimately got back more than $500,000 in money issued through cancelled commissions on exports that continued long after concerns were first raised. The most recent incident actually happened last year when an insurance agent was given $30,000 to put as a down payment on a car she was supposed to buy for somebody else. That car was apparently then shipped out of the country, but she was left with the bill for the remaining money, allegedly claiming the vehicle was stolen and faking T4s, receipts, and other phone records to back up her lie. The regulator says it began its own investigation into this activity after ICBC cracked down on the industry, which is why it has taken nearly 7 years for penalties against those involved. The longest of those penalties was a 10-year suspension. The regulator says 17 decisions have been issued against agencies and individuals, and it also has the ability to refer files to the police and the Canada Revenue Agency. Jason Proctor, CBC News, Vancouver.